Hello everyone. In today's video, we're going to discuss what is COT and how we can use it in our daily trading. Before we proceed ahead, this is the platform called Quantower. If you want to use it for or try it for 5 days, the link is in the description. Moving ahead, this is a footprint chart that I've set up, and I've discussed how to set it up in my previous videos. What I have done here is, on the right side I have volume and on the left side I have delta. Okay, this is a 5-minute chart that we have here. So in the first part will be understanding what COT is, commitment of traders, that is, so that we can understand, not merely look at these values and take trades of it, but actually understand what it is, how is it calculated, and in that fashion it helps us to actually utilize this particular value, or the values rather, of high and low into our trading and take better decisions. So before we go ahead, let me get a plain chart so that I can explain what it is. Now let's start with a 5-minute bar. Okay, so within a 5-minute bar, let me get the pen out so that we can explain it better. So in a 5-minute chart, for example, let's make it yellow. Okay, so for example, this is the candlestick. Okay, and you don't know what has happened inside this bar. So what actually has happened within this 5 minutes would be something like this and this, and finally the bar going like this and closing like this. So if this was a green bar or a bullish bar, so this is the activity that would have maybe happened, and at the end of this bar or during the bar, you keep seeing the COT high low values changing. Now we will understand within this bar what happens and how the COT high and low are calculated. So the first thing let's discuss is COT high. So let's say the bar opened here and it is gone like this up to a certain point, come down, and this is the last traded price over here. So we'll just mark these places. For example, this is A, this is B, and the last traded price is C. Now this could be the first 1.5 minutes of the 5-minute bar. Okay, so why have we marked these points? I'll just explain. So what is COT high? COT high is the point from where the last time this particular bar made a high and the last traded price. So the delta between these 2 points is called COT high. Okay, because it is being calculated from the last time the bar made a high, that is point B and C. So what is COT high? I will just mark it here. So COT high is the delta between all this, okay, the blue line. So it is not taken into consideration this. So the last time a high was made was at B and the last traded price is C. So this is COT high. So we'll just mark it like this. Okay, so this is COT high. Now moving ahead, what is COT low? So at this point, when we are looking at COT low, so COT low is nothing but exactly the opposite. So the last time this bar made a low to the current traded price, the delta between that is COT low. So what would be COT low? COT low in this case would be all this area. So you see the difference. So the COT low is in this entire area, but also includes this part, because there is no new low that has been made till this point. Okay, so now let's extend the bar. So let's see what happens next. Now at some point the bar goes down and it makes a new low at D. Okay, and it comes back again, and this is the last traded price at E. So what is COT low now? COT low is nothing but this part, the delta between D and E over here. So COT low has now changed because a new low was made, and the COT low value would now be this part. And what would be COT high? COT high would now be, will continue like this and this. So the COT high has now become at point E, the delta between B and E along this path. So you see how this changes, and it is dynamic. Now why I was explaining this is so you know what actually happens while the calculation is taking place. So those simply merely just by seeing the values and deciding to form a context with it is a dangerous little sometimes. So you need to understand what has gone within the bar, and also when you're using COT high and low, it is very, very important that you see the context behind. So because in some cases there can be instances when there is a breakout and the COT high as well as the COT low both are positive. So why do I say that? I'll just explain in a moment. So whenever the bar, for example, it has closed over here, so the COT high, as we discussed, was from the high to the last traded price. For example, in this case the COT high would simply be this. So generally, because the market has auctioned from this point to this point, so the COT high generally would be negative, because you will find market sellers or market sell orders over here. So it is generally negative because it is closed from this point to this point, and the market sellers would have taken this down, and the market the COT low would be from this point to this point, so it will generally be positive. Okay, and that is because the mark or the bar has closed here, so it is not obvious, but it is quite evident that some market buyers had stepped in and they've taken the price here. So the limit orders cannot do that much of activity, so obviously this COT low would be positive. So generally the COT low would be positive and the COT high would be negative, but there are some instances. For example, if there is a breakout bar and this does close here and this is positive as well. Why? Because when it was coming down, the buy orders were so many, and there was a sort of exhaustion, you can say, that this ended up still being positive. Does that mean that these buyers are trapped? In a sense, yes, but does it actually mean that these buyers are going to make sense of what is going to happen next? No, not at all. It can happen that the bar just goes down, tests some important imbalance zone here of the previous bar or a POC or whatever, or test the buyers that had stepped in here aggressively to take the bar up. It tests that and zooms up again. So that can happen. So just looking at the numbers doesn't make sense. You have to look at the context behind. This is bound to happen when there is a breakout, because a lot of volume steps in and causes this aggression over here. This can also be because of the stop triggering. Okay, there can be a lot of reasons. You don't know. You need to see what happens next to form a context. You need to see what has happened behind to form a context. What do I mean? For example, we said if this was the bars that were closing right here and this has been a breakout, so this is bound to happen. It will just come here and as we discussed, it will bounce up. Okay, so having understood all this, let's now move to the charts where we can understand what we are talking about. So this is a 5-minute chart, as I just explained, and let's look at one case scenario on Friday the 12th of May, how we could have used this tool to our benefit. So let's first understand the context behind this. So the market had opened gap down, you would all be aware, and this is a Nifty futures chart. This volume that is plotted is always on the futures chart. The spot is not traded, so there is no point in having volume there. It is just an index to be looked at. The index, if you need to trade, you need to be on the futures chart. So this is another doubt that keeps coming up. That is why I'm explaining this part. Okay, so now the market goes, the bids are hit at a very ferocious level, with a very ferocious intensity. The market goes down. How do we know? Let's look at what the deltas were. As soon as the market opens, this part is not that much aggressive, but the point is the first 5 minutes is a lot of orders getting squared off and a lot of new positions being made. For example, if there were a lot of long orders at the close of the previous day, they will try and liquidate, they'll sell, there'll be some new orders that come in. So this is the first 5 minutes generally is a very haphazard sort of a calculation, because you don't know exactly what has happened within this. So you'll always see values not being so accurate at this point, because there are a lot of orders and a lot of various types of orders stepping in just at the open. So what makes sense is to after this what happens. So as we've discussed previously, this is something, this area which can be of really good significance to us, because from here what happens next is the market just pumps down. Okay, and now one by one we will see. So over here, like we discussed, you see both the values negative. So this one COT low that is supposed to be positive is negative, so that is why it has been highlighted in a blue square box or rectangle box. So what it doesn't mean you immediately go into a short because there are so many sellers. Why is that? Because you see the bar opens at the top and closes at the bottom, so this is bound to happen. Okay, there is absolutely there are no buyers or aggression by the buyers still now. The next bar we see is something similar. The bar closes on top, but these COT values are negative. So what does it mean? It means that the low that is from here to here, the delta is negative as well, and from the top to the last market price the delta is negative as well. So again, a lot of sellers here. So this is a little bit of context in it, wherein we are understanding that there is a lot of aggression by the sellers during the first 15 minutes. What happens in the next bar? There is some sort of buying coming in for the first time in the last 20 minutes after the open. So over here we see that this part, I will just excuse this rectangle here, this has been, we'll just delete it. Okay, so this part over here we see, this is the part from where, let's assume that the new low was made over here, and obviously it is made here and to the last trading price. So let's assume it's a linear this thing. So the delta in this part is positive for the first time in the last 20 minutes. Okay, this has not been the case for the last 3 candles, and the selling that has taken place, we can clearly see that this is one really high delta value selling, this one, and of course this one where the POC is. So we mark that zone. We're not seeing this, what has happened after that, but below this point is some buying that has taken place. So this is an important zone for us. What happens next is that there is a shift. Okay, so the first thing that you do is just don't think it as this the sellers are trapped or the buyers are trapped at this moment. What do you see over here is some sort of buying coming in here. Okay, again the same thing has happened. The COT low is positive, that means the delta between this and the close over here, the delta is positive, and even from the top to the last traded price it is positive. So the first time there is some buying coming in. Now what you do here is not take a short. We will have a look where our good trade entry becomes, never at the lows. You can get trapped. This can happen when some profit booking takes place, so you're not sure whether these guys are going to defend this area. Are they the guys who are buying at the lows? Are they the big money? You don't know. Let's go and see what happens next. Now along with all this, what you need to keep seeing is the volume. Okay, so having a COT high and low at really low volumes, for example at even 900s and thousands are good values. For example at 400, 500 over here, it's relative. You can set it up according to what you want, but it's relative. So you see the first 1, 2, 3, 4, 20 minutes, look at the volumes, they're really high. Okay, this bar where there's a flush down, the volume is very high. It's even higher than the opening 5 minutes, and generally the climax, as we say, happens at a very high volume bar. So it happens because a lot of people are flushed out, and new or the big money or the smart money starts stepping in at that point. So the volume is really high, and the price just halts, the auction just halts for good about 15 minutes over here. Okay, so this is the first indication where you see now the delta has stopped giving you high values, even though this has happened here. But what does the price do? It still isn't able to take out this bar. I'll just mark it. It isn't able to take out this bar. Okay, this is really interesting. And this one where we see a negative COT high and low both, again it isn't able to take out the previous bars. So there is just the first thing that you do is not take a short. Okay, the next part we look at is very interesting. Now this one, what happens is it gives a flush down, okay, and it forms a COT high of minus 427. Let's take this also out so that we can see it properly, of minus 125. This is a very low number compared to all this what we have been seeing. And as soon as it closes here, and we see, in spite of this particular I mean delta, the really high delta here, the really high sell orders over here, it closes on top. Not only that, now we have a COT low of plus 67 in spite of having this. So the calculation, what has happened is the delta has been calculated up to this point. So you can see the market buy orders or the aggression by the buyers after this sell order took place is more. So what does it indicate? It indicates that there is absolutely no point in taking a short over here. The better thing would be to wait for an opportunity to buy if this area holds for us, okay. And the next part, as we see now, this is what I was saying. You see both the COT high as well as the low negative. So there are a lot of sellers that step in here. Who are these guys? These are the late sellers. They're all going to get trapped. Why do I know for sure? Because in spite of being so much negative on both the sides, look where the price closes. So firstly, during this bar, what has happened is that if you simply look at the numbers over here, you will see, you will start deciding that okay, it is sort of a divergence and the buyers are trapped. That is one way of looking at it. Sorry, sellers are trapped. But what has actually happened, it is that at some point there were really aggressive sellers. They were firstly absorbed by limit or passive buyers, and then the market buyers have stepped in and taken the price up. So that is what has happened in this bar. Okay, that is why, in spite of being so much of negative delta, that is the market sellers sell orders being more than the market buy orders, the price is closed up. So that is what has happened inside the bar. Now this area is of really good, I've already marked it. So this area now becomes really important for me. I am very certain that if I can get a good trading opportunity somewhere here, okay, I will really step in, because these guys, all these guys that I've just marked with high COT negative values, they are all going to be trapped. And as and when the market keeps stepping up these high delta volume nodes, they start going to liquidate these positions. So that, along with the buyers that have stepped in, are going to help me or help the market to auction above higher at a really fierce pace. So that is why you see, when something like this happens and the market reverses, I mean really in a V shape, you see the moves really fierce, fast, and with high volumes. So this is a very good opportunity to get in. So where do we get in? I will just shift to the replay mode, where we can see the COT high and low forming in real time and how it can help us. Okay, so this is a replay chart that we're having, and we will see that the COT high and low values are being plotted here. They will just move above in the candle. This is a replay mode, so I'll just increase the speed a little bit. This is the 5-minute bar, what I was talking about. So over here, if you see, there are a lot of the green bars over here are aggressive buy orders. That is the imbalance, that is 3 times more than the sellers. So it is looked at diagonally. So if, for example, 43 into 3 is 126, something like that, and it is more than that, it is about 135, that is a green is plotted. So all this you can change in the settings. We'll talk about imbalance and how you can use it in the later or the upcoming videos as well again. So this is the second bar that is open. So you can see this COT values keeps changing in the fashion that we just discussed. So this is an imbalance. Why is it plotted like this? Because I made it 3 consecutive imbalances that are shown over here. We'll plot a line like that. As we just said, we'll discuss about it a little later. Today we're going to discuss about COT high and low. So you can see the aggression of the sellers in all this. Okay, correspondingly you can see the high COT values. So what we are interested in, the bar that has happened, this one and the one after that, that is after 15 minutes. Let's see, let's increase the speed a little bit more so that there you see. So now there's the first time in the first 15 minutes you see some sort of buying stepping in. Okay, so what I will do is I will just go here, and when I am about to take a trade, or even for you, it is better when you're scalping to go into slightly lower time frame to see good entries, especially for scalping. Okay, this helps you tremendously to get precise entries and good stop loss entries. So as I was saying, in the 3-minute bar you see that some sort of buying has stepped in at this zone. You can see this level 1133. So there was a huge seller which has been absorbed, and thereafter the buyers have come and they have taken the market up, as we just explained. Now this is a pop that happens after that. So this zone, there is a the pullback on the upside, because there is some sort of imbalance that is coming from behind. So there is a pullback, and now this zone is again of importance to us. It has already been marked. Why? Because there were some buyers that had stepped in here. Now they've been open taken by the sellers over here. Okay, let's move ahead. Now this becomes a very important zone because of the selling that has taken place. You look at the COT high and low, really high numbers. Where are these numbers located? All within this area. So we know that 240 to 250 is an area of really good significance for us, because if this pops up, there are a lot of sellers that are going to get trapped. Now we'll just slow it down so that we can understand this a little better. Now look at this over here. Look at the volumes that have come in really high. The COT high and low both are positive. So this is the bar that again gives us a hint. Something like that happened here, but what happens in the follow-up? The bar falls down. That is why it is really not a good idea to immediately buy or take a counter trade unless a confirmation is there. What is a confirmation? The price should start auctioning above this level where these sellers have stepped in from the last level. So what do I mean? This is the level where the last time the buyer stepped in and the sellers took them. So this level is of really good importance to us. If the price starts auctioning above this, I am ready to take a buy trade. Okay, by the way guys, this is just for educational purposes. Please consult your financial advisor before putting your money into trading or investing. Okay, so let's move ahead. Again we see now buyers stepping in at the lows. The buyers have started stepping in, and for the first time in the whole day, the delta was positive. The COT high and low, this is the second time when you have COT high and low both being positive over here. It was as well, but they were flushed down. Let's see what happens next. Now you see the tides have shifted a little bit. What do I mean by that? That the buyers are now starting to overpower the sellers a little bit. Okay, this is the third bar, 3-minute bar, where you have seen buyers being more aggressive. So I want this area where the buyers stepped in to get defended. Now let's see something something interesting that happens. You see here that the sellers have suddenly started from this zone, the start of this zone, to step up again and moving it down. So as we said, we need a confirmation, and we are waiting to see which side we need to go on. If it breaks down, very well and good, but as of now it isn't giving me any sort of confidence to take a short. There's nothing over here in the charts that is telling me to take a fresh short. Neither was it here, neither was it here. So if I would have not seen such aggressive buying coming in, I would certainly have stepped into a short. But I am seeing someone stepping in over here. Can you see this? This is the first time, and the best part is that this down bar has the lowest volume amongst all this. Now let's see what happens here. This is the most interesting bar that took place in this whole downfall. You see, I'll just pause it here. Okay, now when this flush down happened and you saw these high delta values coming in, the sellers coming in, what happens is this one, they're all absorbed, and look at the way, the speed with which it just popped up. So the high value, COT high value, was in minus 1000 some plus at some point, and immediately it was taken over and the prices moved up, and you've seen these buyers step in exactly at the levels where they absorbed over here. Okay, so this is now my base or datum line, okay, for this low. It, unlike what happened here, So if you see the difference between these 2 points, I will just delete everything here. So the difference between this, what happened here is they flushed it down. They flushed down these buyers that had stepped in here, but they, in spite of trying again to do the same thing, they have been unsuccessful, and the prices immediately moved back. So now I'm starting to build base. Okay, I'm starting to mark levels where I know buyers can step in. Okay, the first time I knew they stepped in here, they failed. This is the second time they stepped in, and it seems like they're going to succeed. So let's start and start the replay again and see what happens. And you see the shift in COT. You see over here, it was minus 1000 plus at some point, and now the buyers have just taken over control in spite of closing the bar, closing at the new low. Okay, this was a new low for the day, but you see positive COT and delta and COT low as well. It's just minus, it's almost negligible. Now aggressive traders would look for some entry over here, but I would still want to wait. Okay, why? Because anything can happen. Okay, there can be again profit booking that has taken place, which has caused this buying. So I need to look at some confirmation. At least a test or break of this would give me very good confidence to take a buy. You're never late, but you can always be early for taking a wrong entry. So let's increase the speed and see what happens next. Okay, and there is a test. Okay, and you see the buyers coming in now. Where I will just pause it. Now where is it that this was caused from? It's caused from, if you see these lighter values or shades, this is high volume areas, and these sellers have been taken out. So again, this area is somewhere from where I would like to take a pull, a trade off. That is, if this area is tested, I'm ready for a long. You can see these buying coming in. So I will just mark this area. This is one area I would be looking to take a long trade off. Why? Because it has gulped the sellers from here, and when you were looking at the bar, the COT high turned from negative to positive in a flash over here. So there are a lot of buyers that have come in. Again, you can see both turning positive. So there's a lot of aggressive buying that has stepped in. Now this could be a lot of shorts that were trapped coming out, but these numbers are very high if you look at the volumes over here. So if we start auctioning above this, all these guys, all these trapped sellers for a lot of time, 15-20 minutes, are going to liquidate. It is going to really pump this price up in a fierce manner, in a very fast manner. So let's see what happens, and let's see where we could position ourselves so we don't get our entry. It goes really fast. Now this is one place I am ready. Now I can be aggressive here because I have seen that these guys have really aggressively taken the market up, and this area has been breached. So now who is in trouble? All these sellers. So it is not a coincidence that this buying is coming exactly just above these where these sellers were positioned. So now I am quite sure that I will get a high probable entry from this point, which imbalance that is plotted from these buyers. So whenever the market tests over here, or either here or the next test, this is by the way 6 minutes, so I'm ready for an entry. Where is my stop loss? Just below this, not much. Okay, my stop loss is just below this, where these sellers have been taken out, or this POC where again there was a lot of buying, if you see, with volumes and a lot of aggressive buying. So just below this last buyer which was there, either here or here, anything can be stop loss depending on your risk reward, and your position or your target could be this at least needs to be tested, and we'll see if it goes above. So the risk reward over here would be somewhere close to 1:1 or 1:1.5. okay, so let's delete and see what happens next. And this is again, see, look at what is happening here. It keeps testing and keeps giving me confidence, and this is a result of a lot of positions being liquidated. Okay, you can see, and the market just keeps popping up. So I'll just reduce the volume so you can understand over here that what has been going on and how to build your context using actual order flow values that have taken place here with the help of COT high and COT low. So Now if, for example, let me show you a bar that I wanted to indicate. So why I want to show you that is, this is fine. Let's see if we can find a bar here. Yeah, this one. Okay, so these two bars, in fact, where the COT is positive and the bar has closed down. Now if you simply went on the values over here and the context in this bar only, or in this bar only, the bar has closed down, you would say a lot of buyers are trapped. They could be, but you look at the context behind. There is so much of strength now. You know that all these sellers that have been trapped for almost 15-20 minutes are going to keep liquidating depending on their risk management or the risk size. Okay, so this is not a point. As soon as the market gives a pullback, these guys are going to keep coming out, and this is the result. So never simply trade off these high and low values. Build your context, look at what has happened behind. There is absolutely no sign that is giving me an indication that, I mean, I should enter a short here. Where should, if I needed to enter a short, where is it when I start thinking about a short? That is this place, that these buyers have been taken out. So at least this level needs to be taken out. The next one, as we marked over here, this level. And as soon as this level is taken out, I'm sure now my low of the day is going to get tested, and I take a short entry. So it's always better to wait, look, build your context, and then take a position. Hopefully this video was of some help to you. Until next time, bye bye.